Hi everyone, Chad Krober here, your purpose-driven lender, and I'm coming to you with my April economic update. So first of all, let's just start with interest rates. Where are they at? So rates are back down into the low threes, high twos, and mid twos, just depending on the loan product and solution that you're looking for. Of course, that assumes good equity and excellent credit. But it's a great opportunity to take advantage of these rates because they were up in the mid to high threes because we were anticipating higher inflation numbers from the consumer price index and the producer price index, but those numbers have not come in. Also, the April jobs report came out. Only 266,000 jobs created in April, according to the government's report. Many analysts were anticipating it being near the 1 million marker for jobs created. Wasn't even close. And so because of that, it is raising some questions and some concerns for many analysts now saying, why are we not seeing the bounce back that we were anticipating from COVID? Why is the economy not just roaring off? And why are the inflation numbers staying lower than we expected? Well, I'm going to be attaching a Reuters article to this video, which gives some observations and some thoughts into why we're not seeing that roar back that many analysts were beginning to hang their hat on. And I think there's an additional piece that the article maybe doesn't even speak to. And I'm just throwing it out here for conversation and thought process, is that we are experiencing, because of COVID, I believe, the beginning of a historical change in the world economy because of the internet. And we are having a technological industrial revolution. And it will be the third economic revolution in the last 300 years, because we had the first one 200 and some years ago, the last one 125 years ago, and now we're having our third. Employers are evaluating and saying, what do I really need? Why do I really need it? And do I need employees to handle that? Or can I make a shift? And they're not just rushing out and hiring the people back, all of them, or maybe as quickly as they previously had, because COVID is causing a technological industrial revolution. And it's going to be interesting to see how this plays out in the coming weeks, months, and years. The key component of what we're going to be looking at in the coming months and paying attention to will be the consumer price index and the producer price index. That measures what is the consumer paying on the street level and what are businesses paying to produce the goods that we need on the street level. And if both of those numbers continue to go up in the coming months and year, that means inflation is going to increase, which means interest rates will have to go up. But because employers are not hiring back as quickly as we anticipated or we thought they might be doing, because of this economic shift that we're seeing in the world, not just in the US, but in the entire world, who knows if inflation will take off the way that it is, because employers are making these changes and they are evaluating. So it's going to be an odd and new dynamic that we're going to be dealing with going forward in the coming months and years. And as a history major, yeah, I found my way into the mortgage industry, but as a history major, I love enjoying and wrestling with this dynamic of seeing how will history view this time in the world, and what changes are going to come out of it as we move forward in the world economy. Have an outstanding day, and we'll look forward to our next economic update in early June for May. Bye-bye.